You can go now.
Good afternoon, everyone, and welcome to this live market analysis on the 12th of January. This is Jitan Solanki from TradeVest, and it's a pleasure to be here. Today, I want to cover quite a few things, actually, in terms of what's been happening in recent developments and a potential outlook for the US session ahead and also the upcoming week. And I'm going to separate it into several different categories. And we'll start with a fundamental analysis on what's been happening and potential outlook in the upcoming news announcements and what we can potentially expect for them and how we can trade that in terms of the markets. And we're also going to look at a seasonal analysis as well and look at the monthly averages of currency trends and see how that lines up with the fundamental analysis so we can start building a bigger picture of what is likely to happen in the current markets right now and over the next week or so. Then we're going to look over at some charts and, of course, look at technical analysis and see if there's a technical theme that lines up with our fundamental and seasonal analysis. And generally, these are the three things that I look at for any type of trading opportunities. Just enables a higher probability trade when you have three different market forces happening at any one time. Then we'll have a look at some recent trades, some trades that I'm currently in based on the analysis we go through today, and also the outlook for the week, followed by a bit of a recap. So in terms of fundamental analysis, well, what's been happening? In terms of the headlines, well, we know dollar CAD is reaching 13-year highs. Today, we had some very negative pound data, a very weak UK production number, minus 0.7% versus the expected of just a flat month. We've also had several ECB members come onto the wires and talk up the Eurozone. And the data has been good coming out from Germany as well, which backs up a lot of their claims and quotes. We have analysts potentially forecasting a 35% increase, a 35% chance, of a rate hike in March for the US Fed. And for today, we do have the Bank of England Governor Carney speaking at 2:15. And there's a couple of things there just from looking at the headlines that we can see is apparent in the markets. We know that commodities are very weak. Dollar CAD, obviously, 13-year highs. Obviously, weak Canadian dollar, weak oil prices. In terms of pound, we know the pound is in a strong downtrend, and I think that's where really the focus has to be for this week. We've got the governor speaking today, but we've also got the MPC meeting minutes coming out on Thursday, and their analysis of how they perceive the effects of China and what's happening with the yuan. And the global economy, and obviously the rut in the stock market as well. It'd be interested to see how they perceive that and its effect on the UK economy, and obviously their likelihood of increasing interest rates and following the Fed at some time this year. I think most of the market is really focused on a kind of a dovish statement rather than a hawkish statement, considering all the negative news that is coming out in the UK. Very unlikely that they will increase interest rates this year, but of course they're central banks, so you never know. But given the data and the very weak data, it's not a probability in our book. So we're still continuing looking for pound weakness, and I'll show you some things that are coming up on the seasonals and the technical patterns, which suggest we can see some further downside even from this point here. Obviously, with the Eurozone, data is getting better and it's picking up, but right now the markets are a little bit mixed. Euro's going sideways. We've got better data coming out, but also the US, it's a safe haven, and right now what's happening in China, people are tending to flock to the safe haven currencies, especially things like the Japanese yen, which obviously most of you will know that most of the yen pairs have been sold off very aggressively over the past week or so as a potential flight to safety. But of course, within all the different news announcements, there's so many news announcements coming out, it's difficult to find the ones that are really going to affect your trading. Of course, everyone's talking about the same concepts, and sometimes you just need to take a step back and look at it from a different angle, and obviously not necessarily follow the crowd, but try and do something a little bit differently as well. And in order to do that, it's important to know how the market is positioned as well. So right now, everyone is short commodities and the British pound. However, everyone wants to get short on the euro. Fundamentally, everyone is bearish on the euro, even though we are getting positive data out. And considering the fact that we're going sideways, because on a technical chart, there's no real impetus from buyers or sellers, but everyone does want to get short. And it's very difficult. Retail traders can't move the market, but the big institutions can. And obviously at these price levels, they're not really trying to push the market lower. So that does leave some room for some potential upside in the euro before the longer term picture plays out and institutional come in with some potential short positions. Everyone is long on the Japanese yen right now. You can see, Aussie yen, CAD yen, Euro yen, pound yen, dollar yen have all taken massive slides since the beginning of the year. Again, potential flight to safety to the Japanese yen, considering what's happening with China, but everyone is long on that. However, everyone still does want to get long on the US dollar. The economy is growing. Fed have done their rate hikes. We've got potential more rate hikes to come in the year. That is where most people want to put their money. However, of course, it's not as simple as just going in and just buying the US dollar. It's all about timing. And in order to get the right timing, you've got to understand how the market is positioned in order to get that long or that short position on board. So those are the current themes that we're looking at for today and for the week. We're looking for more kind of potential bullishness on the euro, potential weakness on the pound. So some great things happening on the euro pound, just matching those strengths and weaknesses. And again, whilst we're longer term fundamentals to play out in terms of short commodities, for example, we've got to be careful of market positioning, what everyone's position is, and how that trade is going to get there. How is Aussie going to get lower? Obviously it has to move higher first of all, run some stops before other people want to start initiating short positions. So most people will know the general theme of what's happening in the currency market. However, let's take it one step further and let's look at the seasonal patterns that are potentially setting up over the next month or so. And again, all of this is just building in the bigger picture of, where is the strength and weakness right now? What currency should we be trading today and for the rest of the week? And obviously, of course, when we go to the charts, I'll show you what not only we've been trading, but also what we're looking to trade over the next week or so and the next few days, of course. So this is just the monthly currency averages for the futures market of the currencies there for the past 20 years where the data was available. And there's a bit of a general theme here. January is typically the worst month for the euro. We have significant declines in the euro on average, and this also tends to be the most bullish month for the US dollar. But considering what's been happening in the markets, the euro has been going sideways. We have a mixed bag really, because we have a flight to safety in the US dollar. However, people want to use the euro as a funding currency against the commodities to get that play on board as well. So, dollar Swiss, euro dollar, it's been moving a little bit sideways. But the key thing to see from here is that on the euro, we can see February, March, and April, we tend to perform a little bit better and put in some bullish months on average, of course. And remember, this is a 20-year average. So that could give that bias to the potential long euro position. From a technical point of view, when we look at the chart, it has put in a bullish technical formation, but it has been a bit tricky in triggering so far. But we'll look at that a little bit later. So in terms of the seasonal patterns and what a lot of the ECB members are coming out and saying, we have two green lights on a potential euro bullishness. Looking at pound, well, it seems that we have continued bearishness actually over the next 3 months, and the first quarter of the month for British pound typically is the weakest. You can see we print 3 consecutive negative months on average. And given the fact that we've been getting consistently negative data out on the British pound, that would seem to be a trend that will likely be intact. Of course, we've got to watch what the governor says, Governor Carney says this afternoon, and also the NPC meeting minutes on Thursday. The likelihood is that last year they were potentially quite bullish about increasing rates and following the Fed, but given what's happening and the volatility that's happened in China and in the commodity market, they may think twice about doing that and maybe slightly more dovish than they were previously. However, the seasonal bias is also to the downside over the next 3 months, and where the technical chart is now, there's a lot of room for pound to go a little bit lower. In terms of the US dollar, well, this is generally the best month for the US dollar of the year. And we have seen that across the board, not necessarily against the Swiss franc and the yen, which has been more of a flight to safety in terms of people buying Swiss franc and Japanese yen, considering what's happening in China. But there's been some great opportunities on long dollar pairs against some of the European counterparts like the Swedish krona, the Danish krona, the Polish zloty, for example, the South African rand. There's been some great opportunities matching the long dollar strength with weakness in the Eurozone peripheral countries, which are still relatively weak. And also some of the less well-known commodity pairs like the South African rand, for example. Of course, obviously, we've seen massive declines in Aussie dollar against the US dollar and New Zealand dollar against the US dollar, which is another way to play that as well. So that has played out, and the next few months just tend to be a little bit flat in the dollar. And given what's happening, it's probably going to be more of the ebb and flow of what's happening elsewhere in the Japanese yen and the commodity currencies, because they have seen the biggest move. So if we see some short covering or some type of different market positioning, then that will most likely affect the ebb and flow of the US dollar, given the fact that on a seasonal basis, it does go a little bit quiet and a little bit range based over the next few months. In terms of Aussie Australian dollar, of course, everyone is bearish on commodities. So Aussie dollar, New Zealand dollar, and Canadian dollar all going down. However, we've got to be a little bit careful as April, and that may seem a little bit obviously quite far out in the next few months, but you have to start, if you look at a daily chart trader, you have to look at at least the next 2 to 3 months ahead of what's likely to happen. This is not obviously a perfect science, of course. Sometimes the seasonals can run early and sometimes the seasonals can run a bit later. So it's just important to understand what is coming up. And April, in the run up to April, that tends to be the best time for commodity pairs to rally. You can see in April, Aussie, New Zealand, and Canadian tend to print some bullish months for April and tend to print some bullish months in the run up towards April. So we have to be a bit careful in terms of how everyone is positioned. Everyone is so short on the commodities now, yet we've got seasonals telling us that potentially we're coming to a seasonally bullish period. Now, of course, this doesn't mean that suddenly, all these commodity pairs are going to rally and, this is the home run trade that everyone wants to try and get. But we may just see a relief rally and some position taking of some significant short positions that have been initiated obviously over the past year and past few months. So that's definitely something to look at over the next quarter or so. And one of the great things about the seasonal patterns is that you can match the strengths and weaknesses, and there's quite a few strengths and weaknesses setting up here. We know potentially the commodity pairs are in a position where over the next quarter or so they could see a little bit of a rally. We know from seasonals that British pound is very weak as well. We've got Governor Carney coming out later on. We've got MPC meeting minutes coming out on Thursday. We've had very negative data in the British pound, and that trend is likely to continue So we've got a bearish pound and potentially bullish commodity pairs, and that's led to some decent strength versus weaknesses plays that I'm going to go on to show you. Of course, we've got to be careful of the Japanese yen, which everyone is long the Japanese yen right now. Over the next few months, we do start seeing some potential unwinding of those positions as we tend to print some yen bearishness. So those are some significant things to start looking out for and lining up the seasonals and the fundamental plays. So I just want to have a look at the charts and just to see this in action. Okay, so we can see the British pound against the US dollar. We printed obviously a very negative day today, purely because of not only the downtrend but the negative data in manufacturing production. Just taking it out a step. If you look at the monthly chart, what you'll find is actually, on a side note, is that most of the risk pairs, so commodity currencies and stock market as well, and obviously British pound, most of them are actually retracing to their levels before the 2008 crash. So that's going to be very, very interesting. Just looking at the pound chart, the most significant low on this chart was the 2008 low after the crash. And look at where we are on British pound. It's more probable than not that the market is going to go and want to test that 2008 low. I mean, would you believe it? If you look at a lot of the stock markets, HSBC, some of the biggest banks out there, a lot of them are retracing towards their 2008 lows, which obviously for us as technical traders in the currency markets is a great thing, because we can try and forecast and potentially forecast these things and profit from these moves. But who would have thought, hey? Who would have thought only just a few years ago, after those strong rallies, that would be in this position? But nonetheless, British pound is looking very weak here, and there's a couple of plays that we've taken on the trading floor. We've got a pound against the Australian dollar, actually just imprinted a ring high here. You can see that the 50 moving average finding some resistance. Obviously, we've got the downtrend here, but also from a fundamental point of view, we've got pound weakness from not only the news announcements, but from a seasonal basis as well. And we've got reason to believe that the commodity currencies could put in a relief rally here based on seasonal information. So matching that strength and weaknesses, pound against Australian dollar has been a great candidate. And we're looking for further bearishness on this. So just taking a short position here based on, you can see the 4-hour time frame here. Took out these stops here, came a little bit lower, and it's already printed a lower high on this. If you look at the weekly chart, potential targets for a trade, well, let's just take it out a little bit. I mean, we've been running up for a very long time. You can see that the red line is the 50 moving average. I mean, this is the first, second, third, fourth, the fifth touch. So we're on the fifth touch of the moving average. Of course, the more you hit a moving average or a support or resistance level, the more likely it's going to break through at some point. So, we're looking for the next level of support really below that 50 moving average. And really, we could see the market run down to at least this kind of support level here around the big number of 2. So at least looking for a move to this level here. And once we get there, then we'll reanalyze and see what the bigger picture is saying. But in terms of matching out the strengths and weaknesses, that looks like a decent play. If you look at the monthly chart, we can see towards these lows, the 20-period moving average, the blue line, acted as a level of resistance. It bounced off here, here, before it broke through. We've retested it here back in September 2014. Haven't touched it since, and it just looks like it may want to come down and test that level of the 20 moving average, which is at 1.9940 currently, which will put a potential target price for the short position of the daily at 2 at a decent level. So pound Oz looks good from a strength and weakness point of view based on fundamentals and seasonal analysis. And we've also got a technical picture suggesting more bearishness to come as well. You can see here that we tried to bounce off the 200-day moving average, the green line. It did bounce off, came back down, broke through, and now it's finding a bit of resistance in this congested zone here. Obviously, you've got the 50 and the 200-day moving average. So typically, depending on how you trade, this is one that I'll be focusing not only on the daily perspective. So obviously, we've taken a short position on this daily chart based on this setup here. But I'll be looking for continued downside on the lower time frames and trying to capture those retracements and trade this short up until this level here at 2. Now, of course, could be completely wrong, and that's fine. We risk manage our positions with stop losses, and we use probabilities of reward to risk ratios in our favor. But nonetheless, we have a theme. Trading is all about having a theme. Sometimes in the current market, if you're just trading headline to headline or from pattern to pattern, you can get a little bit chopped up in the ebbs and flows of the market because you have to know what are other institutional traders or other traders looking at right now, i.e. what's hot, where are the flows, in the current market. So Pound Oz is one candidate, and if you just look at some of the other pound pairs, they're all at quite interesting levels. You can have a look at Pound CAD, which has potentially put in this double top formation, and I mean, it's a little bit early to say that we're potentially going to retrace lower. And again, I'm not saying these trends are changing. I'm just saying that we're going to see some potential bearishness. So again, all that's going to happen here is a potential retracement of this current uptrend. It may start a significant downtrend from here. I don't know. But based on the fundamentals and technicals and the seasonals, we could see some further bearishness. Now, of course, for pound CAD to go lower, that would obviously mean CAD would be stopped in its tracks, and oil prices would potentially stabilize around here. I think we're at a $30 handle. And for a lot of people, that may seem, oil and Canadian dollar is in a significant downtrend. But of course, we have to understand that OPEC and some of the peripheral countries, are not going to let that happen forever. They're either going to try and stabilize it or at least intervene in it somehow, because they're losing a shed load of money in this oil rut. So again, it's something to look at. Pound CAD from a technical basis does look like it wants to start its retracement, potentially back down to the 50 moving average as well, as it hasn't tested it for a while. So we've got this double top formation, and it's just been testing this resistance level here as well from this previous high in 2008. Okay, so again, I mean, this has already reached its 2008 level. Who would have guessed? So we've got the resistance level just here. So we're at that level there. More likely than not, we're going to get some type of seller coming into the market, especially given the rise that's happened and the significant amount of resistance that it's currently facing in terms of this horizontal level here. So it's a little bit early for me to take a pound CAD short position, but once we start printing some lower lows and lower highs, this could be a candidate to at least come and test its 200 period daily moving average. If we have a look at pound against some of the peripheral eurozone cross pairs, so against the Danish kroner, and a lot of these currency, Danish kroner, SEK pairs, Swedish kroner are unloved, but they actually are quite a dream to trade as well, because they do have the volatility, and they are less congested with algos and things like that as well. So they do follow traditional market structure principles. But we've got a pound DKK. Again, it's just broken out this consolidation, or potentially broken out this consolidation. If I take it to a weekly chart, sorry. So it's potentially broken out this consolidation here, and really there's no significant levels until we start getting into 9.6. And you can see here, we had this previous high that broke through. Again, it may just want to come down and retest that level after it's broken out of this consolidation. Again, it's not going to be an easy route to get there if it does get there, but that is something to watch on the charts. Pound yen. So we look at pound yen again. And one of the reasons I'm looking at pound especially is because that is going to be the hot market over the coming week or so because of the MPC meeting minutes and Bank of England Governor Carney speaking. Also the negative news and the seasonal bias that we already have we talked about earlier. So we've got some significant support levels here on pound yen, and the reason it's good to put these levels on because if you can get some short positions on in and in some decent retracements, then these are some good target levels to start looking to exit some of those positions. And who knows how the climate is? We know that pound typically starts printing some bullish months around April, May, June, July. That's the best period for the British pound. And you never know, the market could reach that level, the 200 period weekly moving average and this horizontal around that time, which could give a good case for a potential long position. But right now, it does look very weak, and we'll be looking to scale into any type of short positions up into that level. Now, obviously, it's very difficult to short something like this on a daily chart. We need to wait for some type of rally higher or some type of Elliott wave ABC retrace or 3-wave retrace higher to the 8 moving average or 20 moving average before we would want to initiate some type of short position. So we've looked at pound US dollar. Again, if we look at let's look at pound US dollar again. So we've got those levels coming up at around at one spot 44, and if that level breaks, which it looks like it will, we are really going down to 1.4. So pound pairs look weak, especially against certain commodity currencies, given the strong rallies up. We could see some profit taking within those. So that is definitely something to watch. Let's have a look at the euro, because the euro, from a technical point of view, on the euro, we put in this double bottom or triple bottom formation. We spiked higher, and on a weekly chart, we put in this low test or pin bar reversal, which is suggesting some potential further upside. Okay, from a technical point of view within this consolidation. Now, it's been a bit trickier to get there. Again, it's fighting against seasonals, because this is January tends to be the most bearish month in the seasonal pattern. And the mere fact we opened, where did we open on the 1st of Jan? So we opened here at 1.0860. I mean, we're already below that. So from a seasonal point of view, it does suggest that at the end of the month we will end below this level. This doesn't mean it's going to start a downtrend. More likely it's just going to continue going sideways, and just really be affected by the ebbs and flows of the yen and the commodity pairs, which is really where most of the money is right now. But for me, it's going sideways. I haven't taken a position on the euro. There's a case for a long position. There's a case for a short position, which is why the market is really going sideways right now. Generally, for these kind of pairs, it's just better to wait for the market to break out in a certain direction. You don't always have to get it right. Your job as a trader is not to be proven right in the market. It's just to make money from the markets. And when you have conflicting information and the fact the market's going sideways, it's really best just to move on and find something else. Having said that, with the euro, because it's acting as a funding currency, some of the cross pairs do look quite interesting in terms of Euro Oz and Euro CAD. However, I do still prefer the pound pairs, because that's really where the money is right now, and the bearish trend is likely to continue, rather than euro, which is still going sideways across its counterparts. So EuroCAD has just approached that resistance level, as most of the CAD pairs have. If you look at pound CAD as well, which we just looked at, that's also approached a significant level of resistance. Oil is approaching a level of support. So we have to be aware of these. We have to be aware of the seasonals and the potential relief rally that may start coming up in those commodity pairs, which could see these kind of markets roll over. And considering they're at resistance levels as well, we definitely do need to pay attention. So just taking it back to the daily chart here, if you look at some of the yen pairs, so just taking out, actually we'll start with dollar yen. So with dollar yen, you can see we're at this support level, it's horizontal support level, as you can see. Dollar yen's quite interesting. We know it's seasonally bullish to be long dollar. Everyone wants to be long the dollar, but considering what's happening in China and elsewhere, there's been a flight to safety in the Japanese yen. However, even though the last 3 month seasonal pattern of the Japanese yen has been long, which has played out. So long Japanese yen is obviously dollar yen going down, the chart of dollar yen going down. But over the next few months, we start to see some yen weakness. So yen weakness would mean dollar yen, or this chart, to move a little bit higher. So that's obviously interesting to know, because that will affect some of the other cross pairs. And I think for this one, it's very difficult just to buy the bottom. We at least want to wait for people to cover their short positions, and then let's see if we can get a higher low in or something like that, or some type of signal that buyers would at least want to get into the markets. Right now, it's just worthwhile playing the ranges or looking elsewhere, such as some of the commodity, some of the commodity currencies like New Zealand dollar against the Japanese yen, which we could experience some retracements before it turns lower again. Euro yen has been quite interesting. It's at this support level here. So just take this out a little bit more. And really, it's at the weekly 200. We really have to see how the euro performs on this. Either way, if we do get a bullish reversal pattern here, then we've potentially got a lot further to go, considering how strong this support level is. You can see the horizontal level at 127.30, and the weekly 200. Of course, if this level breaks, then more than likely we're going to go to 120. But as I said before, really the money right now is where the British pound is. That has the strongest case of more bearishness against some of the commodities, which looks like they're potentially going to have some short covering from here. So if we look at Aussie dollar, for example, so Aussie dollar, of course, in the long run, sorry, just take it out again. In the long run, we're looking for the market to at least go and test these lows again, so 65 cents. So at least go and test these levels. However, it is overdue a little bit of a rally. So these levels here, not this one here, but these levels here will be quite interesting. So this low and this support level, which it broke out of. So this ascending support line has now been broken, and typically we'll look for a retrace to that level and see how the market reacts. Will sellers hold that level, which will suggest further bearishness, or will the buyers want to take it a little bit higher? Of course, we've had the Reserve Bank of Australia come out and say that additional policy is there if needed, but really they don't need to do much right now. And I think they're just going to wait and see what happens with the aftermath of China, and really just take it from there. We've had, the Chinese growth is still growing. All the indicators are suggesting there's still growth within China. But really, it's the oil prices and the commodities which have just sparked fear around everywhere. So, sometimes this is a juggling game, but it's all about finding a picture or finding a theme that is backed up by not only the technicals but by also some fundamental and statistical data, which is what we have in some of the commodity pairs and the British pound and the yen pairs. So really, that's going to be that's really going to be the focus. And if we look at the monthly chart of, Australian dollar, this retrace here was a 618 retrace. Before it turned higher, it just marginally missed the 78% retrace there, just by a few cents. But between the 618 and the 782, that's where we had the retrace. If you look at this swing low to this swing high, we're in that current zone right now. We're in the 618 782 zone of a potential reversal where it turned before. So that is this area here is going to be an interesting area to see how it reacts and whether this low will hold before it does turn higher, or does it want to continue and go down to 65 cents. Of course, we've got to watch the headlines and how the market is positioned as well. If we also look at, for all you Fibonacciists out there, if we look at some of the time cycles, we can see that the last significant retracement from the sell-off, we're around the same magnitude now. Okay, so in terms of this decline here and this decline here, it seems to be of a similar magnitude. So we're actually at that point now. So this will be an interesting level. If you can see from the 2008 crash, we printed a very similar level of style of retracement in the 2008 crash as well, and we're experiencing that now as well. So let's see how Aussie reacts at those levels. If the market does want to break higher, then we're already well positioned with the pound Oz going lower. So again, whilst we may think that Aussie right now it's just probably going to go sideways, maybe go higher over the next quarter or so, it's not really a trade to take long. So another way to play that is to match it with something, with another counterpart that's very weak, because we believe Aussie is going to go sideways, and pound Oz is really the best candidate for that. But again, watch the headlines for this week upcoming. What else to be looking at? So dollar Swiss, actually, one thing I haven't looked at yet. Now, okay, we know US dollar for January tends to be the most bullish month and the best performing month. You can see, obviously, dollar Swiss, we haven't really done a lot. It isn't really moving sideways. You would say that your bias is to move higher. One of the strongest seasonal trades is for a long dollar Swiss for January. Considering where we opened, so we opened at this level here. We opened this level here. We're pretty much just at the one. So, I would still be looking for long positions on this, based on fundamentals and seasonals, and obviously the technicals. We're in an uptrend, but just keeping one eye on the fact that seasonals are due to turn in over the next quarter or so. So depending on the time frame, there's still opportunity to be had here. The dollar CAD will actually look quite interesting, because you can see that it's quite overextended, and this is you have to trade the trend. Of course, for an intraday trader, especially, got to be trading this intraday trend, but just keep an eye on where we are in terms of some of the levels and what's likely to happen moving forward. We've just broken through this level, this high here, but we have this high to compete with now. Okay, again, we're at some significant levels of resistance on this chart. Okay, the market is potentially due a retracement. You can see it smashed through the 618 level. So we're in that potential reversal zone. In terms of extensions, we're at the 1272, the all-important 1272 extension as well. So we've got a couple levels of resistance there, the horizontal and the fib extension. which we'll be looking at. This is not something that I'm just going to start shorting right now, but there's a better way to play it with some of the pound pairs and trading that against the Canadian dollar and the US dollar against let's say, for example, the Japanese yen or the dollar Swiss. So again, there's ways to play it if you want to be short on dollar CAD, but obviously you don't want to get in front of this market here because it's in a strong uptrend and you want to be looking for long positions on the pullbacks. Okay, so hopefully that's been some use. Just a quick recap for the last few minutes of the session. So it's really important to understand market positioning. How is the rest of the market positioned? Everyone's short commodities in the British pound, but everyone wants to get short on the euro. And why is it important to know this? Well, typically the market will do the opposite of what everyone wants it to do. Okay, so it's important to understand that. Everyone is long with the Japanese yen and everyone wants to get long on the US dollar. The long-term trend and fundamentals will play out, but we are overdue a relief rally, and it's all about matching the strength versus weak currencies. So you can see here on the right hand side, we've got the monthly averages of the next few months over the next quarter over the different currency pairs. And you'll see over the next quarter, we do start building up to print a bullish March and April for the commodity currencies, Aussie, New Zealand, and CAD. You can see that a lot of those currencies are at significant support or resistance levels where the market could potentially turn. Of course, you don't want to get in front of a steam train like dollar CAD, but there are other ways to play it by matching the strengths and weaknesses. So you can see British pound typically looks weak for the rest of the quarter, January, February, March. We've got very negative pound data out, and hopefully the MPC meeting minutes on Thursday and Governor Carney today will add to the bearishness of the British pound, which we can play against the commodity currencies. That really seems to be where the money is right now. Euro tends to print a negative month for January, but there is some bullishness for the next few months ahead. And considering the market is going sideways, that could be a stronger possibility if in case that the market does continue to move sideways over the next month or so. We'll be looking for some long euro positions. And also look at the rhetoric for the US Federal Reserve and their March meeting. There's the street up in a 35% chance of the Fed hiking rates again in March. Of course, now that expectation is in, if that expectation is likely to change, we could see some further dollar weakness because most traders, and if not all traders, trade the expectation, not the actual headline. So that's really what we're looking at right now. So just a couple of currency pairs: pound, Oz, dollar, yen, euro, pound, again, especially matching the Eurozone strength versus weakness. Pound SEK and pound CAD for some peripheral trades as well. Those are things to be focusing on based on the fundamental, seasonals, and technical chart patterns lining up. That's it from me, guys. It's been a pleasure. If you do have any questions, then please post it up. You're more than happy to answer those questions. Otherwise, I wish you a very profitable trading week, and I'll see you next week at the same time. Thank you.